Morning, guys. Well, we can't do anything really, I don't think, without looking at the dollar index. Now, currently, we've got the dollar index trading a little bit higher. We currently have a high of 96.99. If we scroll over here, you can see quite clearly our high was 96.86. So we have, in effect, broke the double top pattern. Now, we haven't on the euro as yet, and we know that the euro is the one that is most affected by the dollar index. It makes up 57% of the index. So, what does this tell us? Is the index going to move first, or is euros going to just stay where it is and not break down below 1300? I think if the dollar index starts to motor, then we're in trouble on the euro. Okay, but we know, we've done the euro calculations, we know where we are. We've got the monthly pivot at 96.09. We've got the weekly pivot at 96.35. Our daily pivot is at 96.67. So currently we are above everything that we actually look at. So what I'm going to do here, I'm going to put on a Fibonacci where I can show you exactly how I get to where I get. So I'm going to take it from this level, because we're on the weekly, down to the low. Now we do have levels of resistance all the way up before that, but look at the 61.8. That's at 97.83. We've got all this little bunch up here coming in from 97.55 to 97.70. So with that 61.8 and this little bunch of resistance over here, I do think that we're going to struggle. I like the 61.8. It's not called the golden ratio for nothing. Also, you have your pivot point analysis that I've already sent to you. So we look and see what do we have at 61.8 on the weekly. And we have our R2 on the weekly coming in at 97.72. So there is a lot of reasons why the dollar index should stall at these higher levels, even though we're looking at the indicators positive and the rate of change is above the zero line. But let's now take a quick look at the daily. Our daily shows that we have broken through that double top. It also shows that we are conflicting. Look at the daily stochastics. They are bullish. Look at the daily ROC. That's hitting the zero line. Are we running out of steam? That's what we're going to ask ourselves. Are we actually running out of steam on the dollar index? The short answer is I don't think we are. Okay, I think we stay with the stochastics. I think we look at that 97.72 area, and that will be our guideline for the rest of the week. As we are above that double top, there is no reason at all why we cannot go up and look at that 97.72. Now, if we look at our moving averages, we can see that, they are quite close together. And these will act as support as well as the weekly, monthly, daily pivot. They will support this market if we come back down. We can look at our 23.6. That's coming in at 96.15, which is tying in basically with the monthly pivot as well. So that's where we are on the dollar index. Be careful. The US are on holiday. We know that it's a big holiday for them. It's Veterans Day. So just take care. I know you're not trading the dollar index, but you must, I feel, if you're looking at the euro, you must take a look at the dollar index, because that really is one of the things that this market looks at. Good luck. I'm with you all day. I'll catch you tomorrow.